Price was sitting still, no big candle, no news, nothing. Then in seconds, it dropped hard. If you were watching the chart, you didn't see it coming, but if you were watching the order book, it was already there. Most beginners watch price. They watch candles go up and down and try to guess what comes next. And that makes sense. Candlesticks are the most visible thing on the screen, but candlesticks are the outcome. They show you what has already happened. The order book is what's happening right now. The buy and sell orders that haven't been filled yet. The intentions of every trader in the market, lined up and waiting. That's what moves price next. Think of the order book as two armies facing each other. On one side, the buyers. These are the bid orders. Every row is a price level where someone is willing to buy and how much they want to buy at that price. On the other side, the sellers. These are the ask orders. Same idea. Price levels where people are willing to sell and how much. The gap between the highest bid and the lowest ask is the spread. That's where price lives right now. When buyers are aggressive enough to hit the ask, price moves up. When sellers are aggressive enough to hit the bid, price moves down. Price doesn't move randomly. It moves when one army overwhelms the other. Now that you know what the order book is, here's what actually matters when you're reading it. First, the walls. A wall is a price level with an unusually large order sitting on it. A big bid wall below price, that's a floor. Buyers defending that level. Price tends to bounce off it. A big ask wall above price, that's a ceiling. Sellers defending that level. Price tends to stall there. This is where the order book connects directly to support and resistance. Those levels you draw on your chart, a lot of the time, there's a wall in the order book sitting right there. Second, the thin areas. Where there are very few orders, price moves fast. There's no resistance, nothing to slow it down. When price enters a thin area, it can cover a lot of ground quickly. But here's one thing to keep in mind about walls. They don't always hold. Sometimes, a large order is placed to create the illusion of support and pulled before price ever reaches it. It's called a spoofed order. You don't need to master that concept right now. Just know that a wall is useful information, not a guarantee. Let's put this together on a real example. Here's a paused order book. Look at the bid side. There's a large wall sitting about 2% below current price. That's buyers defending that level. Now, look above. The ask side is thin for the next few levels, then there's a wall further up. Now, watch what happens when I switch to the depth chart. Same information, different picture. The bid wall becomes this steep cliff on the left. The ask wall becomes the cliff on the right. Price is sitting in the valley between them. That cliff on the left, that's your support. The cliff on the right, that's your resistance. Not drawn on a chart by hand, sitting there in real orders, placed by real traders. Now here's what this looks like live. Numbers moving, orders filling, walls shifting. It looks chaotic at first, but now you know what to look for. So before you enter any trade, check two things in the order book. Is there a wall near your entry, and which side is it on? Is the area above or below price thin or loaded with orders? A thin area above and a strong bid wall below. That's a setup worth paying attention to. A thick ask wall right above your entry. That's a reason to wait. The order book won't tell you exactly what price will do, but it tells you where the pressure is, and that's more than most beginners ever look at. If you want the key points from this video as a one-page cheat sheet, the link is in the description. Now, you can see the walls. But what happens when price blows straight through them? That's not random. That's liquidity being hunted. And that's exactly what the next video is about.